Agnostic Trader. Today we are going to deep dive in different areas of the stock markets of last week. We will mainly focus on the NASDAQ, but we also look on different stocks. So let's start with the NASDAQ. I already prepared some deep dive analysis. It was a very tumultuous week. We have seen a lot of things happening. The CPI and PPI data came out, and both of them were hotter than expected. But instead of going down, the market went up. And on the final day, on Friday, we went very hard down. As you see, the last candle, this is the day graph for the NASDAQ, and we see that we had we started the day on 15,475 and we ended at 15,195, which is a pretty sharp drop. And I said, before, that we could expect upwards movements, but it was an overbought situation in the market. Looking also to the WIX indicator, it was around 13. It was almost all-time low. So we could expect some volatility coming up. And next week, Jerome Powell is going to speak, the Fed president, and he will tell whether there will be another rate hike at the end of the year. Still, there is no rate hike expected, but of course it depends on the tone of the Federal Reserve, whether it will be hawkish or dovish. But most of the analysts say it will be hawkish. Looking at the last CPI and PPI numbers, we could expect some more downwards movements. And let's see how far we can get. So this is the channel, the uprising channel, since mid-August, and we're still in this rising channel, but we are almost breaking through it. This is the channel, as you can see in yellow. And this is the support line, and at the moment we are very close to support. So if this trend is going to hold, we need to go up on Monday. But from my honest opinion, I would expect some more downwards movements next week, because there's also some increased volatility coming up, of course, because of the Fed president on Wednesday. So let's focus on the details. So we have a Fibonacci grid, and we draw this Fibonacci from the top of 19 July, when the NASDAQ reached year high. This was around 15,900, and it went sharply down from mid-July until mid-August, almost to 14,550. So this is the bottom, and based on this, we have this Fibonacci, and showing all the important phases, let's say, or important support lines within the time periods. So let's see, we all have now broken 0.5 of the Fibonacci grid from the all-time high of this year. So because we have broken this green level, we can expect this to go next week until 15,080. This means that the channel that you see here will be broken. So there will be no more rising channel. But it could still mean that because looking at this line here, this is a moving average, 100-day moving average, which is a very important technical indicator, that we will mainly hit it very hard, or we will at least bounce very hard from it. Because this line shows a lot of things. This line, most of the time, it shows where the trend lies. And since we are at the end of the rate hike cycle, I would say that I don't expect the NASDAQ going below this level. So, and this level is now 14,800. So that will be the absolute minimum for this year. I won't expect that NASDAQ would going much further down. So for next week, my advice or suggestion will be, but still manage your own risks and stop loss, to get into the trade around 15,080 for a long trade. but I would keep some positions or some liquidity if it's going down more. It could be around 14,900, and that will be the absolutely bottom of it. If, of course, something happens extraordinary, then it's another story. Then, of course, we could enter a bear market again if we break this line. So we're still in a uptrend move, some minor downwards moves, but there is some huge opportunity for next week to enter around 15,080 long levels and see where we're gonna get from that point. All right, I also want to focus on some stocks. Let's look at what Apple did, because there was an Apple event. And if you look at the Apple stock chart, we see that there is a huge decline in the past couple of days. They hit a high of $190. From there on, before it was like before the event, the Wanderlust event, we went sharply down, but we hit like support around 174. The market is closed 175. I see there is some support on the levels of, let me see, on 172. This seems a very strong support line for Apple. And looking at how the lines cross, the 50-day moving average is crossing the 200-day moving average for the 4-hour. But to make it more reliably, I'm going to switch to the 1-day chart. Yes. So for Apple, we are now below the 100 moving average. So this is something to keep on closely. Where is the 200? The 200 is on 165. I don't expect it to come that far. So the next target for Apple for next week will be 172. So this level should closely be watched next week, especially because the Fed President Powell will be giving a speech about whether there will be another rate hike. And because of this high volatility for next week, there will be people selling Apple. And as seen as here, this purple support line will be an important point to consider opening new trades to go long. And let's look at Netflix. There's also lots of things happening with Netflix. On Netflix, we also crossed the 100-day moving average. So that's something interesting to notice. Some things are going to shift on the market. The 200-day moving average is 365, so it's closely following behind. If you look in the past couple of months, we see that 370 will be a very strong support line for for Netflix. Like the 200-day moving average is 365, and I see there's a strong resistance, like previous resistance was on 370. This would now be a very strong support line for Netflix. All right, so let me also check one another stock, and let's look at Microsoft. For Microsoft, there is a little bit a different story, because Microsoft is very close to its 100-day moving average. It is now 327. We are close at 330. So we're very close to that point. And if you look at previous data and previous lines where it stopped, it was around 327 as well. So if we zoomed a little bit in, there is not much left for more downwards pressure for the Microsoft stock, but if this level does not hold, we can expect that it will go until $310 per share. So you can say that there is some momentum left still because it's above 100-day moving average, but because we are so close, you need to really keep this in mind. The level is 327 for Microsoft. If this breaks, expect it to go further down until $310, which is another very strong support line. Alright, so I also want to finish my analysis with the S&P and what to expect for next week. So looking at the S&P, we are, just like the NASDAQ, we dropped pretty far, close to week pretty far. If you look at the week charts, we are making a second week going down after going up for 2 weeks in August. So next week it will be very important, just mentioned earlier. We will need to keep look strongly what the levels will be, and looking at the 1 hour day frame, we see that the 100 moving average is 4,363, which is pretty far from here where we are. So let's look into more detail on the, let's see, the 2 hour frame. All right, so for the 2 hour frame, we hit the 100-day moving average, and this also seems like a very strong, if you look at the previous resistance lines, which lies around here, we can say that we are now a support for the S&P. So if we go to the 4 hour chart, we still see the same. We are below 100-day moving average for the S&P on the 4 hour chart frame, but there is some important level, which is, let's see, it is around like here. This is another line which should be closely watched, and I also want to bring the Bollinger Bands to see how far-fetched the S&P currently is. Let's see the Bollinger Bands for S&P. All right, so for the 4 hour frame, so we are at support for S&P, also like very close to the bottom line of the Bollinger Bands. But let me look at the 1-day chart. Yes, the 1-day chart tells a different story. It's like really long term. We're like in the middle of the Bollinger Bands. And before, like the 29th August, before we had this huge uprise, we were below this, like below mid Bollinger Bands levels, and now we crossed it again. So next Monday, if the S&P, also for the NASDAQ, if this is going down, we should expect more downwards movements, at least 1 or 2% before we are going up again. So there is some loss of volatility ahead for the coming week, so I will take that very closely. And at final, of course, I want to say that don't forget to subscribe to my channel, keep a thumbs up, give a like, and I catch you the next one. Peace.